Yeah, I actually have a real example. So last Thursday on my way to the office, I had an 8 o'clock appointment and I spoke to a lady. She's 78. And she was like, yeah, so what are you looking for? Have you been shopping around? Just try to get a feel out of her, Do you already have life insurance? What's going on? Yeah, I'm looking for term. And I clearly, flatly said, lady, I said her name. I forgot her name. You're 78. There's no term available for you. Welcome to the Agent Q&A. You got your host here, John. Special guest. Joanne's sick right now, so we got special guest fill in again for the second week in a row, Albert.
That's right. I told you all last week that you guys would be rid of me because John would be back in town, but I lied. You guys still stuck with me.
Yeah. So we got a couple of questions. Do you want to start off with questions?
Yeah. I actually, so I've been a little bit out of commission recently because I've been doing some personal and some health stuff. So, I've unfortunately had to take some time off, and, I'm at a different stage in my career now where I can actually say it's unfortunate, because before we used to be like, oh, I can't make it into this meeting, I can't make it into this work. And it kind of felt like a good thing.
Yeah.
Whereas now, like, I recognize I'm falling behind. I recognize, there's things that I want to catch up on. And there's, I feel a sense of responsibility. It's not just even about the money, it's just more about, I want my business to grow and I'm falling behind to some extent.
Right.
So I guess my question, because I've had more than enough time to think, just not working, and which I feel terrible about. But let's say I'm a different type of agent. I'm a newer agent.
Okay.
I've took some time off, whether it's voluntarily, involuntarily. I tried this business, decided it wasn't for me. I took an extended period. Personal stuff came up, life came up, and now I'm ready to get started again.
Yeah.
It's been a couple weeks, maybe a couple months, maybe even up to a year.
Yeah.
What's the first thing I need to do to get started again?
Yeah, we get a lot of these questions. We got some agents that came in, that came out, trying to get back, trying to get revitalized. But first things first, we got to do a mental health check, right? Especially for an agent, like, how's your finance? Like, okay, did you have any issues that you came in here, you felt a little burnt out or got burnt, and now you're trying to give it a second shot, right? So we got to fix your head first, because sometimes you could be looking for a quick fix again. You're looking for something that what can I do differently to make a better impact, right? So if you get that situated, now let's start asking the right questions. Okay, what do I need to do next? What's the first priority that I got to get going? Okay, so now let's do a mental inventory. Now let's look at your lead inventory. What do you have to do? What dials do you have? What calls can you make? How can you make an immediate impact of your financial situation by making an income today? How can we get you your first sale back again by today, by the next day, ASAP, right? So what are we missing? Do we need to relearn a couple of things? Do we just, do we already have the skill to dial, to call, to make a sale, to one call close, or do we need to door knock? Okay. Do you need that inspiration, that motivation, which sometimes, because you're in the business by yourself, you want it, but you might have an issue getting it, right? I would say start getting to the lead dials. Start seeing that it's a success. There's proof of the success. People are making money. Now you get remotivated. You got to start doing it too. Okay, so you push yourself to start dialing and making calls. What would you add to that?
No, I think those are all great points. Obviously, if you're taking some time off, if it was deliberate because maybe at the time you thought it wasn't for you, or maybe just weren't getting the results that you wanted. If you're coming back into this looking to do the exact same thing, don't even do it.
Yeah.
Right. I mean, is that good practical advice?
Nothing's going to change.
If you don't change, nothing's going to change.
Right.
If that's the criteria upon which you stopped in the first place. Mm-hmm. I mean, the other thing I would add is clearly, obviously, you need to have inventory. You need to have leads to work with. Otherwise, you could have all the right intentions and you want to go back to work, but if you don't have anyone to talk to, if you don't have anyone to help, what do you expect to change?
Right.
But I guess, the biggest thing is joining live dials, being around other people. That's the easiest way for you to kind of get the ball rolling. Like, I'm not saying to get motivated, because motivation doesn't last.
True.
Right. So for me, wanting to get back to work, it's not because, hey, I feel really motivated to work. It's already built into me now at this point, after 15, 16 years in this business.
It's a habit now, right? It's a process.
Like I don't feel right not working. I don't feel like myself not being part of this business on a day-to-day basis.
Yeah, it throws off your mental that you feel unproductive.
Yeah. I mean, like, man, I had so much time on my hands, like just like laying in bed and just trying to stay off of my leg and stuff. But there's times where I'm trying to stay positive. I'm reading, I'm trying to listen to podcasts. I'm talking to people, answering calls, answering emails, doing everything I can, just to keep my mind busy. But in those few moments in which, I have way too much time on my hands, like your mind goes in dark places. Yep. Like even me, like you guys may not know this, but then John and I are actually very positive people.
Yeah.
We have a dark sense of humor, dark, dry humor. Yeah. But then that's because, we just know how to compartmentalize and we know how to just have fun with it, because bad stuff's going to happen in life.
True.
Bad stuff's going to happen in your business. You can have ups and downs, and you got to manage the emotional component of that. We've done that. But, even as much as I know this and intellectually I know what I'm going to do, as much experience as I've garnered over the years, the thing is, even in those brief moments in which I have time, it goes to dark places. My mind goes to dark places.
Yeah. Because you have to think like both sides, right? The positive and the negative. Right.
Well, I'm human,
yes.
No matter how much I know what I'm capable of and what I'm going to accomplish and how much good I have going on, your mind still kind of creeps into those negative places at times. And for me, I know like today, I wasn't even planning on coming in today because I'm not fully over whatever I need to get over. But the thing is, like, Bisho was like, I walked in, he's like, what are you even doing here? And I'm like, these moments are good because I just to be around other people that are productive, be around other people that are actually working, other people that are positive, even for a brief moment. It actually is uplifting.
Yes.
And it actually kind of keeps you gets you refocused on, okay, here's why I need to take care of what I need to take care of so I can get back into work. And if you're trying to be an island, if you're trying to figure this out on your own, trying to completely isolate, which you can do, but if you're not in the best state of mind, you need to get around other people.
It's so much harder. It's like comparing it to working out. If you physically already drove to the gym, you're bound to do something. Right? But if you're thinking, oh, I'm going to do a home workout, it'll never happen. Right? Because you're in your own head and you don't have anything else, any environmental factors, any individual factors that can bring you back up.
So, unless you develop that discipline.
Yes.
Which, let's be honest, most new agents, you haven't developed that discipline yet because you just haven't had that much experience.
Yes.
Not because none personal against you.
Right. So like there's different habits and different things you got to build up into this business. So that's one of the key points, right? So habit of continuously buying leads, habit of continuously dialing at a certain point in time, habit of consistently saying the same thing over and over again with the same clients. That's going to get you the results you want, right? So a lot of these are habits we got to build up. So do an inventory, find out which habits do you need to add to, which habits you got to kick, and let's get you better. What's other questions? I can't read. I was looking at our previous videos before, and there's been a lot of, especially social media noise. We get a lot of comments. We get a lot of good or bad comments. We don't know where they're coming from. We don't know how much knowledge they know about the business, right? But everyone's an expert in the social media now, right?
Everyone's an expert.
So here's a question for you. When it comes down to term versus the additional plans that we have, what would you say if you have an agent or a client that told you, Bert, the best advice I got was buy term, invest the rest?
So on the face, let's dissect it.
Okay.
On the face, it's not bad advice if you're in that position, right? So the thing is, buy term, invest the difference, invest the rest, whatever that catchy slogan is. Right?
Yeah.
So the thing is, it's a very myopic view. So the thing is, it's not necessarily wrong. However, the thing is, you're not looking at the entire picture. Like you have completely pigeonholed yourself into thinking, hey, this is what it should be.
Yeah.
And why? Because someone else told you.
It's brainwashed.
Like, did you genuinely arrive at that conclusion on your own, based on your experience, based on your financial situation, based on your years of investing, which you probably haven't even invested that much, to be honest.
Yep.
The thing is, you have bought this rhetoric that people have put out there for you. Now, when people have asked me, because, we came from another company where whole life is the way to go because it's permanent. You're guaranteed to get something back. If you buy term, you're throwing your money away because the odds are you're not going to die.
Correct.
Right. And, you know, we drank that Kool-Aid for a little bit, you know, because like that's all the product that we had.
Yes.
And so the thing is, sometimes we become creatures and, you know, we get conditioned based off of the environment around us. And the reality is, what's the right type of insurance or what's the best type of insurance? You let the client decide. Mm-hmm. You assess their financial situation, which, by the way, in this setup that we got at FFL to be a broker, it's great. It's great because, you know, we have everything under our portfolio in terms of all the different insurance products and great companies, A-rated carriers, all that good stuff. And the thing is, it's not just to have it because, hey, you know, we can like shop for the best rates and shop for the best product. It's just whatever the client needs, we can deliver.
Yeah.
And it's a great feeling to be able to know, hey, whatever the problem is, we have a solution for it. Yep. Now, the thing is that solution only applies if you're willing to listen to the client, if you're willing to think critically and actually get past that idea, that notion that, hey, this type of insurance is the right way to go. This type of insurance, it's like, come on, man. Seriously. Yeah.
I would add to it, if a client says buy term, invest the rest with our company, okay, great. Here's a term product available. But if an agent says buy term, invest the rest, that's an advice, quote unquote advice, coming from their training of a specific company or a specific IMO or industry where they may not have all the products.
Some say training, some say indoctrination. Some may go so far as to say brainwashing.
Brainwashing. I would call it brainwashing because they don't have additional products available for that. So when there's a counter argument of a whole life or index universal life, guess what their counter argument is? That's a scam. You don't need that. There's so much fees. It's expensive. Buy term, invest the rest. Well, what if you come into a client that hasn't done any investment? We got a 50-year-old individual looking for final arrangements, or they want the term because they were indoctrinated looking for a term. They've heard some radio stations talk about it, right? And he said, yeah, I heard from so-and-so that buy term, invest the rest, but I had a heart attack 2 hours ago. I had a heart attack 2 years ago. Can we sell them a term?
No.
Then it doesn't apply. So now you got a situation where this client does not have a policy and does not have an investment. Did we save them? Did we help them? Can we provide for them? So this is where Albert goes back into saying that this is a very broad statement coming from an individual that may not have enough knowledge within the insurance industry for it.
Yeah. Plus, as an agent, as a professional, like, why are you limiting yourself to just like a blanket statement for everything? Like, why not assess the situation? Now, the thing is, if you're limited to that product, I mean, you might want to assess where you are. You want to truly assess where you are because, like, it's not even always just because, like, hey, this is the only product that we have. But sometimes in certain organizations, they may say, we might have this other product, but just push this one because financially benefits us.
Yeah, we get paid more on this.
Or we're trying to hit some type of quota or whatever it is. So the thing is, not that there's, I guess, I don't know, ethically. I mean, I don't want to get into
morally or ethically.
but the thing is, look, just think about the client. Just think about what's their situation. Don't project your own financial situation or your own lack of understanding thereof onto the client. Like, hey, this is the way. This is the only route to go. It's like, there's not the only route to go. This is the only route that you know of. This is the only route that you believe in. This is the only route that you've been exposed to or understand. Like, do a better job of trying to understand the industry.
Yeah. And also coming from an agent, if an agent tells you that, you got to ask him what credentials can they give you as an investment advice. Okay. We're life licensed, health license, and accidental license. We don't have any Series 6 licenses or 7 licenses. I can't individually, I'm not a financial advisor, right? We can't individually give you that advice. We don't want to lose your money. We're just here to sell you a life insurance that you want to protect your family or your assets. That's it. Right. We want to keep it simple. All right. So any other last topic on that?
Well, going back on that, I mean, bringing up a scenario you brought up, like if the client says like, hey, I heard buy term, invest the rest. And then you're like, sure, we can go ahead and do that. Yeah. I mean, that's us serving a need for the client. If that's what they want, then that's what they've told us. Sure, we can definitely do that.
Yes.
And that's a great feeling to be able to do that. But I would also, in certain situations, like depending on their age, depending on their financial situation, depending on what they're looking for, like if they're in their 70s or 80s.
Oh, yeah.
And then they say, hey, this is what I want. It's like, I'll even take a step further and I'll be like, we may or may not be able to get this for you. Like, I'll do everything within my power to try to help you. But my question is, why do you want this? And
yes.
And then they'll be like, oh, I heard this from my, my nephew or whatever. I heard this from whoever. And then I'll be like, okay, so here's a different impact potentially. Here's the consequences if we do this. And then I'd be like, still your call, because I'm here to take care of your needs. But the thing is, there's these other options, and I still feel the obligation to be able to review that with them if I feel like there's something in their best interest that they're unaware of, that they've been ignorant of up until this point. Because look, we have a job, and I take our responsibility very seriously, because like, we have fun, we sure we get paid, and all this other stuff. But the thing is, at the end of the day, I mean, like, when people die, I don't want to be like, oh, I sold them the wrong product, or this is not going to cover them later.
Yeah, I actually have a real example. So last Thursday, on my way to the office, I had an 8:00 appointment, and I spoke to a lady. She's 78, and she was like, "Yeah, so what are you looking for? Have you been shopping around? Just try to get a feel out of her. Do you already have life insurance? What's going on? Yeah, I'm looking for term." And I clearly, flatly said, "Lady," I said her name. I forgot her name. "You're 78. There's no term available for you." And she's like, "Oh," and even if there was, it would be like a mortgage. So when we deal with clients in that age, term is usually not the best solution. And if they do apply, I say this line: term is meant to be expired. Term is meant to be outlived. So if at your later age that you still qualified for it, you're qualified to outlive the term, which is not going to serve you any purpose. Right? Because at that end stage, you might just need to take care of your final arrangements, have a little bit of inheritance, or from what they said before, if you invested the rest, you don't need the term anymore. You're self-insured. You're taken care of. So just taking advice, hear it out. But yeah, start to feel the people that are telling you these advices, where are they coming from?
Yeah, and there's that saying of the customer is always right. The customer is king, all this other stuff. It's not always the case. I mean, we got to treat people with respect. We got to listen. We got to be courteous to them, but they're not always right, because if they were always right, they wouldn't have this problem to begin with, right? Yes. They'd already have the solution already taken care of. So like, when clients say, hey, I want a term, like, realistically, what's a term good for?
So term is good for three main things, right? To cover your assets, your liabilities. It's a short-term liability. Okay? Term is really good if you have young kids, because you're responsible for your young kids. Term's really good if you have a mortgage, because your mortgage is a short period of time, 15, 20, 30 years, to cover the mortgage in case you're not around. And then lastly, for your income protection or your college education for the kids, both combine into it. If you're a single income breadwinner, or your income largely depends, or your family largely depends on your income, we want to protect that about 5 to 10 times your salary. But when you're older, you're probably retired, so your income's taken care of. Kids are grown, so they can take care of themselves. And the house should be paid off. If not, then you still need the mortgage protection. So that's it.
So yeah, I mean, so you got to take into account all these different things, which is the reason why it's vitally important for us as agents to ask the right questions.
Yes.
And if for the agents, come in and say, like, they give us a black slip, but the client really wanted this, and and I'm like, but they don't qualify, first of all, and like, they may want this because they think they are prioritizing this, but the thing is, by asking these questions, you help them identify what their true, immediate, and real, genuine problems are.
Yeah.
It's like, if a client, yes, you're right. I mean, when it comes to a term, you want a term policy because it's the cheapest for the largest amount of coverage, and it covers you during the highest liability for whatever set period of time.
Mm-hmm.
Yeah. But the thing is, if a client's like 78, and then they have a heart condition, and they have health conditions where they wouldn't qualify for a term anyway, but they took out a reverse mortgage, so they have a large liability, you can't help them with that. There's nothing you can do about that. That's something that granny and grandpa decided to take on their own.
Yeah.
So at that situation, just be like, yeah, well, we can't help with that. Okay. However, and sometimes we just got to be blunt about it, and be frank about it, instead of just dancing around the subject or pussyfooting, because now you show more uncertainty. Now, they have less confidence in whatever it is that you have to say.
Yeah.
But you got to give them a dose of reality sometimes. And that's why the client's not always right.
Mm-hmm.
The client should be always heard. And then it's on us to be able to provide the correct assessment of their situation. So in that situation, which has come up,
yep,
Just be like, I understand that, taking care of this is a important thing to you. However, the thing is based off your age, based off of your health conditions, you wouldn't qualify for a term policy anyway. So unfortunately, I can't help you with that. However, what we can do is cover your final expenses, because have you taken care of that yet? No, you haven't. Okay. Now the thing is, if we can get you a little bit of extra on that, so the thing is, it will cover enough for your funeral at the very minimum, and then anything on top of that, if your family wants to be able to have a little bit of time to be able to pay off the home, pay off the mortgage in the meantime until they decide what they want to do with it, they have a little bit of wiggle room.
Yeah.
Okay. So then you present that option at that point, because you got to work with what you got.
Yep. You can't save them all. So moving on to the next question. So the next question we see often on social media, Albert, how can I be my own bank? How can I be my own bank? How can I borrow out of my own policy to be my own bank? What is this concept, and why is it so largely like confused? People think it's like the greatest thing ever, but they don't understand the bare minimum of things.
Now that concept is actually really cool. Like, isn't it? Like it sounds like be your own bank. The thing is, you can borrow against money from yourself, from your own policy, using your life insurance as the collateral. And, instead of getting hit with points and interest rates from the bank and other lenders and whatever, right?
Right.
Sounds like an awesome concept. And if you're in a position to do it, you should explore it.
Okay. On a quick sum, how can you explain it to our audience? How can you explain it to a normal American that doesn't have any license? How does that infinite banking or be your own bank concept work within about a minute?
Well, so be your own bank or infinite banking, it's a concept. It's not a particular product.
Yes.
It's not the particular carrier. It's just it's typically done through a whole life policy or through an IUL policy.
Mm-hmm.
Okay. And there's different ways of doing it. So you should do your research before you start doing all that. But it's through one of those type of policies where you front load it, which means you have a good sum of money to front load it because you've done well for yourself financially, you've saved up. So you're able to put that aside and you're able to front load your policy. So then it accumulates cash value at a faster rate because it has more time and more compounding interest for that to really start to take off. And then after that, you can start borrowing against it on your own policy.
Okay. Yeah. So
instead of borrowing against the bank, and I instead of borrowing from the bank, I'm sorry.
Yeah.
So you're using an insurance product instead of having to take a loan out from a bank.
Yeah. So in essence, can I just start it with no money?
No.
So a lot of people confused, like they think, oh, I'm a bank. I'm a bank now. No. So you're using a life insurance product. The life insurance product's cash value is being used as the collateral. Okay. So it's like I have $50,000. I give it, instead of just, let's say I want to buy a car, right? $50,000 car flat. I could either pay that off completely with my $50,000, wham, bam, thank you, ma'am, done. Or I go and get a loan from a credit company, a bank, an insurance, whatever, and they will give me an interest. I can get financing for it, right? So the concept of the infinite banking is, instead of financing and paying someone else those interests, you're financing it through your policy. So you're financing it through the insurance company, and the insurance company is willing to lend you that money because they have your life insurance as a collateral. So that is the whole concept. But to have collateral, your life insurance has to have a nominal amount. It has to have enough of the cash value to be used as the collateral. So you either front load it using a whole life product, or you build it up throughout time with the compounding interest of an IUL. That's the concept. Hopefully that helps for a lot of people, because a lot of people are confused. They just want an insurance, and then I'm the bank now.
Right. Yeah, this goes back to the previous question that as far as what's a better policy, the thing is, the concept is great, but it's not for everybody. Because the thing is, if you don't have money, you can't start one.
Yes.
Even if you don't have enough money, you can't start one.
Right.
So that you can't like minimally fund it. Just be like, yeah, I really love this BYOB thing, or be your own bank or infinite banking thing. Like, I don't trust banks. I don't want to give them my money. I want to do this all myself. And then if the agent says like, hey, how much do you have to start? $30. Like, it ain't gonna work. It ain't gonna work.
Not even that. So remember, it's using a life insurance policy. So what if you're in your 50s and you want to start it? Well, your cost of insurance is going to be high.
Right.
The remaining is going to go into the cash value, and the cash value accumulation is going to be less within the year span. So even if you front load it, we're talking about big money
right.
to really start this off. So you got to have some money to begin with.
Yeah, I mean, like insurance is great because it's a tool, and there's so many different instruments within that toolbox to be able to fulfill a lot of different financial needs for clients, and put them in a better position, improve their quality of life, improve the quality of life for the remaining family members that they leave behind. A lot of different great things to do with it, but I just think it's really dangerous when agents out there trying to market and just be like blanket statement, here's what it is, and then clients here and there's like, oh hey, but this one guy said this.
Yeah,
it's like there's it's nuance, and there's a lot of different. So work with a professional that actually is trying to understand your situation rather than just pigeonholing you into, or it's just trying to stuff you into this like certain box when it doesn't fit.
Yeah. And more importantly, you got the internet now, right? So if you're hearing these conversations happen, well, use the internet, do some research,
yep.
Go to Investopedia, go to YouTube, watch a couple more videos, pay attention to us, and then ask the right questions. What's the good? What's the bad? What's the process? How is it affecting me? How does this work in my situation? Do I have the funds for this? So am I healthy for this? So these are the right questions for you guys. So any other questions for you in your end?
Well, a lot of people have been responding. They've been engaging on your posts about the different types of insurance. And some of these people get like heated because they're like, no way, this is not the way to go. And I always just kind of laugh because it's like, okay, Mr. Expert.
Right.
Like, how do you typically respond to those guys?
So I start seeing, I was like, wow. So this must be how other accounts are doing it. Like they're just watching these people. You say one statement, one hears it one way, or one just declares that it's the worst advice, or it's misinformation, and then they start talking about their stuff. Another one agrees and argues with the other stuff, and then next thing you know, I said something and then two people are fighting for it. What the heck? I should have been doing this more. This is enjoyable.
Well, some of it's obviously self-serving interest because they see it like, hey, this is to validate who I am.
Right.
To validate what I do.
Yes.
But the thing is, I'm always like, you're entitled, everyone's entitled to their opinion. So whatever, that's fine. I'm just like, how do you make such a definitive statement, or are you just here trolling?
That's the thing, right? It's like, so you kind of, with us in our experience, you kind of already know, I've heard that statement before. Yeah. I know where that came from. I know from which company trained you for that. So you can engage, but then at the same time, if you engage, what's the point? Am I going to convince this individual? Am I going to convince the other individual? Or they're just trolling. So what I do is, if there's a real question, legitimate question in there, I personally just DM them. Hey, thanks for having a chat. Let me know if you have any questions. I send them more information on a one-on-one basis, because it makes a difference once you start doing a one-on-one, where they're at in their life, how's their situation, how's their health, how's their finance, what are they looking to protect? Do they have kids? Do they have family? Are they in their own business? All these make a difference in the tailored programs that we can create for them. And that's what's great about us, because we have all these carriers. Can we do term? Yes. Can we do infinite banking? Yes. Can we do a whole life? Yes. Do you want $1 million whole life? Yeah, we can take care of that too. So this is what's great about our business. We could do a one-on-one for them, and we have help. We have advisors. We have specialists that if it's past our grade level, we can get additional support from that.
Right. Just never stop learning. Just continuously be a student. Continue to learn your craft. And for those that are just closed-minded, just thinking this is the one path and one way to go, I feel bad for your business. I mean, you could be doing well. I mean, I'm not to say anything, but it's ironic because like I never read any of my own like comments like in my own stuff. Like I don't even watch my own stuff.
Yeah.
But I read yours, and it's always interesting too, because I'm like, I'm not mad at any of their comments. It's like, oh, this is what this guy believes. And
yeah.
Good luck to him. Good luck to this person. But the thing is, like, it is kind of interesting because while I don't engage, I'm like, is this what most people think? Or is this what some people think? Because like, it's interesting to kind of try to understand the world around you. And if you're like, okay, well, if someone believes this, then the thing is, they're probably telling clients this, and they're probably trying to spread their own message, which for me, I'm like, look, it's a big world. You can do whatever you want. For me, I'm always like, it makes me a little bit more aware. And then I try to learn from it. I'm like, how do I prepare myself for clients that may have been told this type of information or misinformation or whatever it may be. And so like there is value to it.
Mm-hmm.
I don't think there's value in people arguing back and forth because I mean, like if they're arguing back and forth and they're not being open-minded whatsoever, then for them, it's just, bro, you got too much time on your hands.
Yeah. I got one guy that's responding to everything. I'm like, wow, at least he's defending me. So, which is a good side, but it also makes good content. It's like, oh, well, I guess I can have a second topic to bring that up. So it just puts in perspective of like, okay, so there's a lot of misinformation out there. We do know a lot more and we could be more vocal about it. And so we're going to continue having these conversations. Adam had a question. How do I know whether to pitch whole life or term or universal? Okay. And then second question, when you outlive the term, do you receive all your premium payments back? So let's answer the last one real quick. There's 2 term policies that we offer. One is called the level term. Level term means you get it for 10 years, 20 years, 30 years, and that is your coverage. You outlive it, it's gone. You either have to do a renewal on it or you just buy a new one. And then there's one that's called term with the return of premium. So your question is, do you get all your premiums back? If you bought a term with the return of premium policy, yes, you get all your premiums back. We also have policies that give you 50% of your premiums back or 75% of your premiums back, but it has to have the name on it, return of premium or cashback option.
But keep in mind the term with return of premiums could be a little higher.
Yes.
But the thing is, I don't know. I think for a lot of agents, they pitch it too technically. Like we learned this from Andrew Taylor, right?
Yeah.
He talked about the way to get people to understand is like, hey, I got a policy that'll cover you for the amount that you're looking for. Take care of your mortgage, leave time for your kids, whatever you want to do. Mm-hmm. It'll cover you for this many years. And if you don't die, you get all your money back. Sound good?
Yeah. Keep it simple. Yeah. So that's how the term with the return premium comes in. So Adam said, so is term sort of a gamble? What kind of? Yeah. The insurance company's betting your life on the line that you're not going to die and they're not going to pay out. And then they'll take your premiums. Yes. But it's insurance. The whole purpose of insurance is to remove your risk and absorb that risk to the insurance company. So you're removing your risk. So the gamble is, well, there is no gamble by removing that risk. The gamble is on the insurance company. If that makes sense.
Term insurance is like auto insurance or property like homeowners insurance.
Yeah.
Like you'll get paid out if you die.
Yeah.
If that event, the triggering event happens, so that triggering event is you dying.
Yeah.
So you'll get paid out for that. But the thing is, you got peace of mind during that time. That's what you're paying for.
Yeah. It's just in the contract that there's a fine print in the contract. It's good for 10, 20, 30 years. So just understand it at that point. And then we'll finish off with the last question. That's a little bit longer to explain. So I'll let Albert do it. So how do I know whether to pitch a whole life, a term life, or universal life?
Yeah. There's a lot of great products out there. There's whole life, there's term, there's IULs. So, I mean, the situation, how do you know which one to show? Be professional. Learn the products, ask your clients the questions, identify what their most pressing needs are, identify what their budget is, their health is, all these different factors, because it's not one size fits all.
Yeah.
And the thing is, yes, there's guidelines as far as if you're new to this industry, you don't really know that much about it. Yeah, I mean, there's like, hey, just go with this product first because it's going to help simplify things for you until things slow down a little bit. And the thing is, even if that's not truly what the client needed the most, the thing is, it's still good for them to have it.
Yeah,
because and I've known this from recent days. It's just like we're all exposed to potential of death.
Yeah, potential deaths and accidents. So I would just say, as a new agent for you, Adam, you're gonna learn the skill, and you're eventually gonna start figuring out patterns. But the simplest way for us in our business, do a financial inventory sheet, final expense or mortgage protection inventory sheet. Initially, with the client you're speaking with, they've expressed, if it's a lead, they've expressed some interest of something. They've expressed an interest in a mortgage. They've expressed an interest for a final expense. So that's going to help you tinker that around. But if it's just a random individual and they say, hey, look, Adam, I want to get life insurance. Okay, do a financial inventory sheet. We'll ask us questions. We'll tell them what's the best solution for them at that space and time.
Yeah,
keep it simple.
For me, I actually started including that when I would talk to my clients now. It's just, I asked that question. I'm like, hey, so typically we get leads. So the client filled out something, they fill out something online, they physically filled out something. So the thing is, the question I'll ask is, hey, just curious, on when you filled this out, what was your biggest concern? Like, what made you fill this out? What were you thinking about? What's been on your mind? Right? So then they'll tell you.
All right. So it'll open it up. But yeah, some people, if they're younger, they're not going to have a full knowledge base on this. This is where you're the professional. You got to provide that knowledge base, right? You got to provide, cater, help them direct on the decision they have, and then also based on their finance, right? So
one more caveat on that too. This just typically when you're purchasing leads, it'll tell you what it's geared towards a particular type of product or
right.
particular type of concept of covering. Like we say mortgage protection, but that's typically term.
Yes.
Typically, I mean, unless they're a senior in which they can't qualify for term, then we got to use a whole life product to cover for the critical period coverage, all this other stuff. But generally, like if you're working final expense leads, it's a final expense, which is a whole life, right?
Yeah. So I would just lead you, if you're starting off, there's a lot of complications with the advanced markets, different variables for mortgage protection. So I think the easiest one is you start getting better and get better at your craft on final expense. So one-stop shop. They're looking for final expense burial. You'll plug them in with an insurance plan. And then once you get better and you get more knowledge, you'll expand into it.
Final expense is simple, cut and dry. It's just like client's going to die. How do you protect their family to take care of their funeral and take care of the final arrangements? That's it.
Yeah. What do you want? You want a cremation or a funeral? All right. This is how much it is. Here's what they're going to get. Here's how they're going to use it. They keep the rest. That's it. So hopefully that helps. We'll have more questions pop up on next Monday, and this will be live or not live, but broadcasted on YouTube. So we'll see you guys next week.